So I'm going to take a few minutes here to go over the homework that you have for the beginning part of Chapter 3. This is what I do in class, and they can ask questions as we go along. So if you have questions on any of the homework, you have to email me, but I'm going to hit a few of the things that did come up in class. So for Chapter 3, you had exercise 1, where they're asking you for various journal entries. And the one thing you'll notice here is that we've got owner's capital instead of, you know, the, let's say, invested cash in the company. We get owner's capital instead of what would be common stock in a corporation. So some of the problems here are based on proprietorships and partnerships. So they will be using an owner's capital account, which is the equivalent of a common stock account. And then for dividends, it would be an owner's drawing account. That's like a drawing, D-W-A-R-W-I-N-G. Okay, so that's one thing that you'll run into there. I think most of these journal entries were fairly, they should be good review for you, and if they are not review, you may want to go back and to the orientation section and just go over some of the AC 101, you know, basic journal entries. On the April 30th one, owner's capital again was credited because we're dealing with a sole proprietorship. Okay, so if there's anything else on that one. You also had exercise 4, so let's take a quick look at that. Okay, so on this one, just change this up a little bit here. Wiley, I flip back and forth between the Wiley solution and my solution, and you can do whichever makes more sense for you. The way Wiley does it, they just kind of give you numbers, and there's no indication of what the numbers are about. And so this is what I have here. You're given a goofed up trial balance, and then you're asked to fix it. And so the way I go about that is you've got the incorrect trial balance that you're starting with. You make your adjustments to it. I color code them because I'm kind of a nerd. And then you get your corrected trial balance at the end. Wiley and I end up at the same place, but when I go back a year later, or when someone else is looking at what I've done, they know what those numbers mean. They know what has happened here. Where with Wiley, where they're just going, oh, plus 180, minus 130, and so forth, you have no idea. So this is just a very effective way to do this. So we start out, cash received was debited for 570, and the actual collection was 750, so we have to make a change of 180, so you're debiting cash and crediting the accounts receivable. A computer for number 2 was purchased on account, but was recorded as a debit to supplies. So you have to remove that 500 from supplies, put it back into equipment. For services performed on account for 890, but then the account receivable was debited for the right amount, but service revenue 89. Well, the phone rang, the coffee spilled, you know, whatever, it just didn't happen. So we have to make the 801 adjustment here. When you're making corrections, you're not going to have debits and credits, you're just going to make the corrections. So there won't always be a debit and credit to these. Payment for 65 for telephone was called office expense. Oh, I'm sorry, a payment was recorded as a debit to office expense and debit to cash. So the office expense part is okay, but the cash, you have to take out the 65 because it was improperly debited, and then you have to take out another 65 because it should have been credited to begin with. Okay, when unearned revenue, it was found that service revenue was performed. So we simply, sorry, unearned revenue. Okay, so we debit our unearned and just recognize that we did earn that revenue. Okay, and they forgot to post something to salary and wage expense, so you simply put that in. And this one is annoying. A payment on account of 206 was credited to cash for 206 and credited to accounts payable. So it should have been debited to accounts payable, and it was the wrong amount. So you have to debit accounts payable for the you have to debit the accounts payable for 260 to remove the wrong amount, and then you have to debit it again to get to the right amount out. So you can see how that works. I just doubled them there, the 466. Okay, and a dividend was debited to salary and wages, so you simply get that out of there. So when you add and subtract across, you end up with your corrected trial balance, and you have some sense of what happened and why you did it. Okay, 3.6, just basic adjusting entries. And I didn't have any questions in class on these. I think they're all fairly straightforward. And let's see, then we come to 10. And this one we started to work through in class, and it's a very long problem. Sometimes it's helpful to use the work papers provided by Wiley in the assignment section for these. The only really, you're starting out with a trial balance. They're giving you a bunch of adjusting data that's in a slightly different form than you might have had it. And if you look on Blackboard, these are all there, you know, in the work-throughs of exercises and problems. And the only confusing thing is the depreciation is probably in a different format than you've run into it before. So they're saying, yeah, salvage is 10%, so salvage is 12,000, you get to your base, and then the depreciation rate is 4%. And that gives you the annual, but we're only doing 3 months, so you divide that by 4 to get 180. You do the same procedure, except they're using different rates for the equipment. So I think that was the only real confusing item there as you're going through. You just have to make sure, here we're doing the adjusting entries for the quarter, and so you have to adjust the insurance expense for 3 months, because it's a quarter. Okay, and then you take this through, you can you get to your adjusted trial balance, and then it just asks you for, this is kind of way over here, I think you get over to the actual financial statements. The adjusted trial balance, I don't know if we get to it, I thought we had financial statements here, but apparently. Okay, so that would be the homework that went along with what we did on Thursday, the 27th.